Hello, my fellow Ripplers. This is Chris Miles, your cash flow expert and anti-financial advisor. Welcome to our show that's for you and about you. Those who work so hard for your money, you want your money to start working harder for you right now. You want that freedom, cash flow, and prosperity today, not 30 or 40 years from now, but right now to live that life you love with those that you love, doing what you love. But most importantly, guys, it's about not just being rich, but living a rich life, because as you are blessed financially, you have the ability to create a bigger impact and ripple effect through the lives of others. Guys, thank you so much for allowing me to create that ripple effect through you. Thank you for binging and sharing and allowing us to expand and grow this message, because people need this freedom. They need this message. And you really are the reason that this can spread. So thank you so much. As a reminder, you can check out our website, moneyripples.com. There's the contact us page if you have any questions. And also go to our YouTube channel, the Money Ripples with Chris Miles page. Go there, subscribe today, especially as we start to release new videos and new additional bonus content.
Chris Miles was able to retire twice by the time he was 39 years old. But he's not content to just enjoy his own financial freedom and peace of mind. Chris wants you to have your own ripple effect so you can live free today. He's not the financial advisor you expected. He's the anti-financial advisor you deserve. He's jumping behind the mic right now, ready to make waves. Here's Chris Miles.
Guys, today I want to go over something that I actually bumped this episode up on the priority list because it's so time sensitive, very time sensitive. In fact, you're listening to this 2 months later, it's already too late. Okay. So this is something that happens that really is for the end of 2021. And after this point, it's changed. Now it's useful after 2021. So you understand what's going on, but these are the changes that are happening right now. And for some of you, I know this is very, very important because you've been kind of wondering about this infinite banking thing, right? Should I be doing the infinite banking or not? Is it really worth it for me to do it? And now there's various questions. Now, here's the thing. If you're in a position where you don't have two nickels rubbed together, this infinite banking strategy is not for you yet, right? But for those of you that say, I am putting money away and I want to invest, I want to do things to create more passive income. And hey, I would love it if that money paid me more than once, meaning that I not only made money from passive income, but it's also paying me extra returns in another place at the same time, getting paid in two places at once. Guys, that's possible with the infinite banking, especially when we refer to as the max ROI infinite banking policies. And what we really mean is lowest death benefit, lowest cost possible, allow the maximum of cash to go in, giving you the biggest rate of return possible for a policy. So this has always been our priority here with Money Ripples, right? Like we always want to make sure that our clients are getting the best, the absolute best policy possible. In fact, hands down, I guarantee that toe to toe with anybody, we could take them on, right? Even when people say, oh, I've got an infinite banking policy, guess what? I guarantee you're paying too much in fees. In fact, that's the number one complaint of these infinite banking that are also whole life insurance policies, right? Those of you that don't know what that is, we've talked about in other episodes, but it's a way to create this tax-free, supercharged savings account. Imagine if you had a savings account that didn't just pay you 0.0% in the bank, right? But money that was liquid and available that you could use in the next week. You can get access to it, but it pays you much better returns than 0.0%. It's tax-free, meaning it grows tax-free, comes out tax-free. And get this, guys, you can use it for whatever purpose you want. You don't have to wait till you're 59 and a half like a Roth IRA, which has similar tax guidelines, right? There's no 59 and a half rule, no limit to how much income you make, no limit to how much you can really put in. It allows you to be able to put this money away, and then you can choose to do whatever you want. You can blow the money, you can go and invest it, which is what we recommend to make more passive income and get your money paying you twice. Because the cool thing is you can use this money and at the same time invest it. So it can sit there in the account and you can get a separate line of credit from the insurance company or a bank to go and invest that money outside. See, this is the collateral, the cash savings is the collateral, while on the other side, you're able to invest it. So what happens is that the insurance company is paying you tax-free interest on that money. And at the same time, they give you money on a line of credit that you can turn around and use to go and invest however, whenever you want. And that is the cool thing about it. Here's what's happening. If you listen to my podcast episode last spring, I believe it was March, at the end of 2020, with the whole emergency tax relief bills that were being passed, one of which that allowed insurance companies to lobby in some things into this. They call it the 7702 tax, right? The tax rule that's coming out. what it did is it changed everything for insurance companies. So every time we try to set up these policies, we try to make them minimal cost as possible. Well, some of the insurance companies, they have these guaranteed returns, right? So up until now and through the end of 2021, this is still true. The guaranteed that you get on a whole life policy, which is a no dividend type of scale, right? So if you get paid a quote unquote no dividend, you earn a minimum of 4%. Anything above it is a dividend, of course, right? So right now, most companies are paying between 5 and 6%. They're really low because of low interest rates, but the floor is 4%. So worst case scenario, you're making more money than the bank anyways. Here's what's changed. From starting now, 2022, right? All of these companies are required to change their products. So all of them are changing it, bringing down the guarantee from 4 down to as low as 2%. So the 2% has now become the legal minimum that Congress has passed, right? This gives insurance companies a little bit more leeway, allows them to stay more profitable and this kind of thing. Now, a lot of the companies are, putting the floor around 3% as well, I've noticed lately, but I've started to see these numbers come out. I've started to actually run these calculations. In fact, I spent a couple hours a few days ago running all kinds of scenarios, comparing different companies, trying to see what's happening, what's changing. So part of me was wondering, hey, is it going to get better? Because as a result, if they lower the actual guaranteed return, that means they probably have to increase the minimum payment that's required, right? So the insurance costs have to go up to compensate for a lower return. That happened. But here's what also is happening is that, so they're telling us speculative. They're like, hey, it's possible you might be able to dump in more, Chris, based on your strategy. It might get better, but we can't really guarantee it. It might not. I have confirmed it. It is a fact. It did not get better. So yes, it's more expensive. Now, here's a cool thing. If you have children, you can actually start dumping in more cash because of this reason, right? Because now it's allowing people to put in more money. But the costs have gone up slightly. So a lot of the companies did a lot of adjustments, so it doesn't look much different. But running out the numbers right now, 2021, it's not going to be any better than it is right now. 2021, the policies you can get currently before the new ones start in 2022 and all the old policies stay the same, won't get any better. So 2022 onward, the returns don't go as high as they are for those of us that have bought from 2021 and before. What does that mean? That means if you buy a policy in 2021, you're grandfathered into the old rules with the old costs and everything. That includes a minimum of 4%, not 2. So even though everybody else gets 2, you stay at 4 forever. It also means that your insurance costs are less, right? It makes it much easier to deal with this. So I'm not saying that 2022 was horrible. Like if you're not in a position to do it, don't stress yourself out. Don't put yourself in a bad financial position. It's not a lot worse. But I will tell you this, that it's, I nickel and dime over hundredths of a percent, right? I want to make sure we squeeze out every little piece we can get out of there. Every little return we can get, I squeeze out of it. I will tell you 2021 right now is the best it's going to be. Like it's not getting better right now. It's actually getting a little bit lower on the return side versus higher. So that means if you've already been debating this and you've been wondering whether to do it, now is the time. And just so you know, if you have to get approved and you have to fund the policy before the end of the year. So don't wait until December because it's very possible that approval happens in January. It could take anywhere from a week to get approval to a couple months, depending on your situation. So if it goes beyond into January, you're going to have to get the 2022, the new ones that have a little bit higher cost. So again, it's not massive. It's not a horrible difference, but long-term, it does make a difference on what it's doing, even a little bit short-term too. So again, if you want the best returning policy possible, 2021 is your year and you've got very little time left. So I'm not going to overly embellish this. I'm not going to go beyond what I need to do. I want to get this out. And I want you to know that if that's the case, if you've been considering getting this, reach out to us, right? Reach out to us. You can go to the contact us page of moneyripples.com and say, hey, we need to look at these numbers. Let's see what they are. If you've already been talking to us, maybe you already had us run numbers and you haven't made a decision yet, time to make a decision, right? Again, time's short. Doesn't mean you can't do this in the future. You're listening to this in 2022. It doesn't mean you can't do it. We're still going to get to the best numbers we can, right? I'm just saying, if you had the choice, which would you rather have? The higher or a little bit lower? right? Obviously, that's how I feel too. In fact, it's kind of putting pressure on me. I'm like, man, maybe I should get more policies right now. And that's totally up to you guys, right? So that is the update I want to give you. It is changing, and the numbers are not getting better. They're actually getting a little bit worse. And by the way, just so you know, the death benefits are actually higher with the same amount of money that we put into these policies. You get a higher death benefit and a better rate of return right now versus later. You can do that same number, but the death benefit will go down and your rate of return will go down slightly too. So if you want the biggest bang for your buck possible, 2021 is your year to do it. So again, if you've got questions, reach out to us at the contact us page, moneyripples.com. Everybody make a wonderful and prosperous week. And I hope that this was beneficial for you and it would save you possibly tens of thousands of dollars over the years. Make it a great day, guys. We'll see you later.
Visit us online at moneyripples.com for more resources to help you fix money leaks and get your money working harder for you now.